You are thinking about becoming a real estate investor. Maybe you've never purchased a piece of rental property before, or you've seen too many HGTV shows and now you want to become a flipper. But you have questions about how to do that because you don't have a giant stack of cash sitting on the coffee table beside you. So if your question starts with, hey, can I get financing to become a real estate investor? The simple answer is yes, you can. There are a lot of different ways to investigate financing investment properties. And there's 100 different ways I could go just with this conversation in educating you on how to do this. I would tell you that no video that I can cut for you is really going to make you answer all the questions that you have. So the best way to have this discussion is through an actual phone or face-to-face conversation. If you're thinking about doing this, if you think you want long-term real estate investment or short-term real estate investment as part of your portfolio or retirement strategies, we probably should schedule a phone call or a face-to-face meeting to talk through the different ways that you can accomplish that. But I can give you some of the basics here today. So essentially we see 3 to 5 different types of real estate investment in residential. Let's talk about throwing out the commercial side. I don't want to talk to you about commercial buildings and things like that. That's a conversation from another day. Let's focus on residential real estate. And I'm talking about anything from a single family home or condo to a duplex, triplex, or even a quadplex. So if you have a building with 4 units in it, you can finance that as a residential home. Anything with 5 or more living units is going to be considered commercial. So most people are buying a condo or a standalone home and they want to rent it out, or they want to flip it, or they want to do an Airbnb, or they want to do a long-term rental. There are different financing options based on what your plan is. So the first thing to identify isn't necessarily the property. The first thing to identify is the plan. Do you want to purchase a property that you're going to hold long-term and rent it out and use that income to make the payments on it while you build net worth through appreciation in the property and paying down the debt? That's the traditional real estate investment. Hey, I own a house that I'm renting to someone else. They're paying me the rent. I'm using that to make the mortgage payments. I'm maybe building some cash reserves with that money, and I'm going to own that house for 20 years or 30 years. And then when I retire, either that house will continue to be monthly income for me, or I'll sell that house for a one-time big gain and I'll put that money in my retirement account. So that's the traditional investing method. To finance that method, there are several different ways to do it. But the number one traditional financing is just buying an investment property with 20% or more down on a Fannie Mae, Freddie Mac type loan. We call those conventional loans. So, hey, I've got 20% down. I want to buy this, let's say $400,000 house. That means I have $80,000. I'm going to finance $320,000 on a 30-year fixed loan. Those are pretty straightforward loans. You need to have good credit, not necessarily great credit, but it needs to be good. You need to have some cash because you're going to have 20% down, and you need to have a debt to income ratio that shows that you can afford to manage that rental property. If you want to talk more about the specifics of any of those, let's do that on a one-on-one conversation. The second financing type option available for a long-term ownership scenario, we now call a DSCR loan. That's debt service coverage ratio. We sure love our acronyms, don't we? A DSCR loan just basically says that the house is going to earn enough in rent to make the mortgage payment. If that's the case, we will lend you the money. Now, it's not quite as simple as that, but it kind of is. Like, you're still going to have a down payment. That down payment is going to start at 15% for most people. You're still going to have pretty good credit. We're not looking at your income in a situation of a DSCR loan. We're looking at the income of the investment property. So we have to say, okay, with the rate you're going to get, is this property basically going to pay for itself? If it will, then we have ways to lend you that money. So that's a DSCR loan. And those are the two primary ways that we finance a long-term real estate investment. What if you want to do a short-term real estate investment? Well, let's talk about what that means. Airbnb and VRBO isn't a short-term real estate investments. You're just renting for short periods of time. So if you want to buy a lake home, put it into service as a short-term rental, that's still a long-term investment. Most likely you're going to own that house for 5 or more years, and that means you're going to look at those two traditional things that we just talked about. But if you really want a short-term ownership, like a fix and flip, that's a different ballgame. So let's say the house next door to you just went into foreclosure, and you know that you can buy it on the cheap and it doesn't need that much work, maybe just a coat of paint and some new carpet, and you think you could make a quick 20 grand. We call that a fix and flip, and there are specific loans designed to help you purchase the property, renovate the property, and then sell the property. And those aren't that complicated. Again, you're going to need some capital to put in it, right? You're going to need some cash for your down payment because it's a risky loan if you don't have any of your money in it. But if you're putting money into it to acquire it, then that minimizes the risk to the investor. So they're going to lend you money. We call that a fix and flip. You're going to get the money to purchase minus your down payment. You're going to get the money to do the renovations after the fact. And then once those renovations are done, you're going to list that house for sale. And when you sell it, you're going to make that money back. So long-term investment strategy, we go Fannie, Freddie conventional loans or a DSCR. Short-term real estate investment strategy, we're going to go with a fix and flip loan program. There are some other creative ways to do that, such as take out some debt on your own personal residence and use it to pay cash for that investment property. We can do that through either a cash out refinance or a home equity line of credit. If you don't hear anything else that I say today, understand there are a lot of different ways to get involved in real estate financing, or rather real estate ownership, and there are many different financing options available. And if you'd like to understand what they are and which one is right for the situation that you're in, we're just a phone call or a DM away. DM us investment property and we'll get the dialogue started.